On Friday, we saw the S&P 500 almost make a new all-time high, while the Qs were actually able to make that new all-time high at a time when the Fed is sending a dire warning. Is this nothing more than a major stock market trap? And in today's video, we're also going to announce the 4 winners for the prop firm accounts. Now, last week, we see that the Fed officials are sending a dire warning on the U.S. economy. Now, this was before Friday, where we saw the Qs actually making a new all-time high, but it's still really not going to change anything. One of the things that they talk about is we have to worry about that we could start to see the unemployment rate. We can start to see more and more layoffs. And you might think, Mike, we're not going to see a layoff. Look at the unemployment rate. It's at 4.2. That is a very good reading. But as we go on through this article real quick, they also talk about a 2-speed economy. Now, it's not what you think. It's not fast and slow. They're talking about the divide between the haves and have-nots. The top earners out there are really benefiting from all the gains made off the stock market, 401ks and such. And the lower income individuals are not being able to participate in that. So for the upper earners out there, yes, it seems like everything is fine. But the people on the lower end of the total poll do not feel the same way about how the economy is going. We can also see this article right here where we're starting to see some back and forth within the Fed. A voice breaking from the Fed ranks just heightened her push for cutting interest rates fast. Now, Jay Powell keeps saying, you know what? We got to be data dependent. Maybe we're going to lower rates. Maybe we're not. We got to wait and see. We don't want to cut rates too soon. We still think that Trump's tariffs are going to have more shocks out here to inflation. And speaking of inflation, let's not forget on Tuesday, the CPI data will be released. Let me know in the comment section down below. Do you think the CPI data is going to come in hot, showing that we actually have more inflation? Or do you think it's going to come in cool, showing us that inflation is on the move lower? Then on Thursday, we're going to get the core PPI data. Then on Friday, we're going to get some retail sales data along with preliminary consumer sentiment and preliminary inflation expectations. Now, we look at why Bowman is actually wanting the Fed to go ahead and cut rates a lot quicker. She warns the job market is weakening, is urging faster action. Now, that would go against what Jay Powell has to say. However, if you look at this article right here, 120 million square feet store closings in the U.S. are on pace to set a new record in 2025. And what this article actually goes on to say is there are more stores per square foot shutting down at a faster pace than even what we saw back in 2020 during the pandemic. And if you guys know anything about what happened to stocks back in 2020, that was the fact that we had a major stock market drop, but this time it was extremely fast, all the way from February all the way to the low in March. Look how much the market actually dropped. If we look at the Qs real quick, from high to low, the Qs dropped 30% in a matter of 2 months. Now, what's really funny about this is if we zoom this out, we zoom it on out, that little blip right here does not look like anything in the context of what the market has been able to do. When we're going through that mess right there, it seemed like, oh my goodness, everything is coming to an end. And then look how much further the market has went. Even the pullback that we saw right over here in the beginning of the year looks a lot more extreme than what we saw back during the pandemic when you just zoom the charts out. Now, if we come over and look at the fear and greed index, right now we're sitting at 59. We are back into greedy territory. If we look at the timeline, you can see that last part of July, we really sold off here just a bit, almost got back down to the 50% mark. And now we're starting to try to curl up here just a bit. Then we come over and look at the most recent investor sentiment survey. What do we see? Well, the bullish sentiment dropped down to a reading of 34.9. The undecided also dropped lower to 21.9 from a prior reading of 26.7. And the bears really stepped up, jumping up from 33 all the way to 43.2%. Now let's talk about some discrepancies that we're starting to see. We come over and look at the SPY real quick. Notice the SPY on Friday did not make a new all-time high like we saw with the NASDAQ. And then we look at the SPY versus HYG, which is going to be high yield bonds. High yield bonds are in the bottom. Now notice as the SPY is coming up to make a new all-time high, notice HYG continues to make lower highs. That is a warning sign out here, number one. Then we come over and look at the 10-year bond versus the 2-year. We see this starting to steepen. We need to be on high alert because if this starts to steepen, the stock market most likely is going to come under pressure. Then last but not least, we come over and look at the Dow Jones versus the transportation index. Now, as you notice over here, the chart on the top will be the Dow Jones. Chart on the bottom is going to be the transportation index. We have top number 1, top number 2, top number 3, and notice that the peaks in the transportation index, are they getting higher or are they getting lower? That is another warning sign out here for us. Now, if that wasn't enough, notice the SPY on Friday was actually up 0.78%, up $4.93. The SPY represents the S&P 500. Then if we come over and look at RSP, the equal weight S&P 500, look at the candle difference, kind of a doji-ish looking candle. And again, I'll throw that up once again. SPY almost closing at the high of the day. Then we look at the equal weight S&P 500 and we have that doji-ish looking candle. It was up 33 cents on the session, up 0.18%. That is a huge discrepancy out there, kind of showing us it's the big heavyweight stocks that are really moving the indices. What happens when some of those stocks start to catch a cold? For instance, we know Apple has been on the move as of lately, and that is all thanks in part to Trump and Cook working out some type of deal, and we'll see if that deal actually comes to fruition or is Cook just trying to buy a little bit more time. Now, before we come over and look at the key levels for the SPY real quick, let's talk about the 4 winners from the giveaways from Thursday night, Friday, and Saturday. The first winner from Thursday's video is going to be Bob Close. Give it up, give it up. Then we look in Friday's video. We have winner number 1, Geo Trades. You win a Take Profit Trader account. Then we have Cheryl 994. You're also be getting a Take Profit Trader account. And from the video on Saturday, we're going to have Tammy Pogar winning the My Funded Futures accounts. I want to make you guys aware of some amazing prop firm deals out there. Apex Trader Funding, 80% off all their evaluation accounts, passing as little as 1 day. Tradeify, 35% off all account sizes. Use promo code Mike for those 2 prop firms. Last but not least, Take Profit Trader, the prop firm with the best payout policy out there. You can get 40% off all their evaluation accounts, no activation fee, and get your test fee refunded on your first payout. To take advantage of that offer, use promo code Epitome at checkout. So now as we come back over and look at the SPY real quick, notice if we pulled a Fibonacci retracement from the high, right here, all-time high, down to the recent low, now that we've been able to not only get above the 78.6, but we also closed above it on Friday, really increases the probabilities that we're going to come back and make a new all-time high. Now the question is it going to be a look above failure? Do we simply spike above it and then come back down? Or do we simply end up still making a lower high and end up going back lower? MACD indicator on the daily chart is still crossed to the downside. On the 4-hour chart, notice as we're coming right back towards this area, look at the MACD indicator. Is it making new highs? Absolutely not. Then we dive down, start looking at the 30-minute chart. We saw that large gap that we had up on Friday. The market ran up, and then we basically consolidated up. But the lows that were made on Friday continue to make higher lows along the way. But look at the MACD indicator. It looks like it's just getting ready for a cross back to the downside. Now on Tuesday is when we're going to have that CPI data. And we're going to see if that's going to be good enough to push us to new all-time highs or get us going right back down. Because as we come over and look at the futures markets, one of the key levels we were talking about on the live stream. Speaking of live stream, if you guys don't want to miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. But as we come over and look at this, we have this A to B equals C to D leg. Here's the A to B leg. That's the impulse leg. The corrective leg is the B to C leg. And we project right up here for D. We'll notice we still have not completed that target. That's going to be 64.51. And we're going to have to round that down to 0.25 since the S&P trades in quarter point increments. But now with the developments that we had on Friday, we have another ABC pattern on the way up. From the low right down here, right up here, that's going to be the impulse leg, A to B leg. Then we pull down for the corrective leg, and notice that ABC pattern is also going to complete right around that same location. So do we go ahead and maybe overshoot that just a bit, make a new all-time high, and then come back down? Or is there no looking back, and we're just going to see the S&P continue to run all the way to 7,000? Now, if we look at the volume profiles, I want you guys to pay very close attention. Here's value area high right down here at 6375.75. Notice where we close. We close well above that. Now, what that tells me is it's highly probable this week or next week we will come back and visit that level. And remember, in last weekend's video, we were talking about the same scenario, but in reverse. Last week, you can see value area low was right here. And look at where we closed. We closed way below that price point. Then on the very first day of the week, whoop, we made it all the way back up there, testing that price point. That will be a very high probability target. The question is, will it be this week or next week before it comes back and gets filled? Now, so come over and look at the daily profiles out here on the 30-minute chart. Notice on Friday, kind of a P as in Paul shaped profile. You can see right here, here's the lower portion of the P. Here's the rounded out section right here. And notice on the daily chart, we also are closing above value area high, which came in at 64.17.5. Now, that's also going to be a very high probability target. Now, if we gap up on Sunday, you guys that have come to my live streams probably know what I am already thinking. However, I'd like to see, can we maybe spike above the high even from Thursday, spike above that? Then we can use that area right there as our jump off point. We simply draw a horizontal line across that. Do we spike above it? As soon as we start coming back down below that price point, I then want to target value area high. I then want to target the point of control at 64.09.5. I then want to target value area low. Then anything below that, let's not forget, we barely missed on Friday, hitting that untested point of control at 63.68.50. Now, we come over and look at the volatility index real quick. Notice the VIX on the daily chart. We are almost right back down to where we saw that last volatility spike in the market. And on Friday, the VIX absolutely was getting destroyed, down 8.62%. I was actually hoping it would be down at least 10% or more, because then the stat would be that either Monday or Tuesday was likely going to be a down day in the market. We jump over and look at the dollar index real quick. Dollar index, a little bit of a bullish day on Friday, small little up candle, not a whole lot to see there. We still have a potential ABC pattern on the way up, but take a look at gold on Friday. What do we see gold doing? Gold pushing on up, trying to make a run, the new all-time high, did not quite make it up there in the futures market. We almost did, but again, just simply getting rejected right back, right around the swing high that we saw over here that was placed on July 23rd. Now, another troubling sign that we have out here is if we come over and look at crude oil. Crude oil continues to show more and more weakness, and we have this potential A to B equals C to D pattern on the way down, which will bring crude all the way down to 56.06. Now, one thing to note, that pattern will not be validated unless we get below 62.73. If we get below that, watch out. We're probably going to see crude oil going down towards that level. And the reason why I say this is a problem, if the economies around the world are thriving, then energy prices should be on the move up higher. Normally, we're going to see higher crude oil in that type of environment. Now, as we come over and look at the Qs real quick, what do we got going on here? Well, on Friday, Qs just barely making a new all-time high. Prior all-time high was 574.63. On Friday, what do we see? That we saw a high of 574.77. So yes, it was enough to make a new all-time high. On the weekly chart, big bullish candle closing at the high of the session. MACD indicator still looks strong at this moment. But as we look at the daily chart, do we start to falter and come back down below the prior all-time high? If the answer is yes, well then maybe this just turns into an upper level consolidation. We work off some momentum before we go ahead and make another run up. Or maybe this is going to be some distribution taking place and we see the markets coming down here just a bit. On the 4-hour chart, you can see once again, MACD indicator, as we're coming up towards those highs, simply not confirming those highs. And then the 30-minute chart, notice we had that gap on Friday. So we'll see, can we come back down and potentially fill that gap? And we have a P as in Paul shaped profile with the QQQ. So if we really start trading really anywhere below about 573.48, highly probable we come down to the lower third of the range at about 571.52. Anything below that, I want gap support, and then see, can we go ahead and completely fill the entire gap? Now, as we come over and look at the 4-hour chart on the NASDAQ futures with the weekly volume profiles, notice like we talked about with the S&P 500, here's value area high right down here, about 23,537.75. And notice, where did price close? Well above that price point. Now, the NASDAQ was able to smash one of the ABC targets this week, but then notice we have another ABC pattern that was setting up on Friday. Here's the A to B leg, the B to C leg, and that gives us a price completion at about 23,949.50. Now, even though we saw the Qs making new all-time highs, look right over here to the left. The NASDAQ futures did not make a new all-time high on Friday. So we'll see if it goes ahead and tries to ring the bell out here on Sunday night or even Monday. Now, this could also be used as a line in the sand. If we breach above the all-time high for the Qs and we start coming back down, well, guess what? I want to go ahead and start pushing my targets all the way down towards a retest of value area high, because anytime we close outside of value, we expect value to be retested within the next 1 to 2 sessions. Well, since this profile that we're dealing with represents 1 week in time, a session would be 1 week. So with either this week or next week, highly probable we come back down and visit that level. Now, as we come over and look at the daily profiles on the 30-minute chart, notice on Friday, we were able to test the P point and we closed near the session highs, also closing above the daily value area high, which comes in at about 23,720.00. So if we do get this set up on the 4-hour chart, meaning we go ahead, we break above all-time high and we start coming back down, and we don't want to use value area high off the weekly as target number one, well, guess what? We have value area high right here from Friday that we could use as target number one. We get below that, then the point of control becomes a target. Then below that, value area low. And I kind of like this minus development area within the profile. If we start to see weakness out here Sunday or Monday, then this is going to be a target location for me. Now that target will come in about 23,594 down here to about 23,582.75. Now, if you guys like to learn about my fund and futures, new payout policies, then you want to make sure to check out this next video right here.